Welcome to the Banking with Life podcast. I'm your host, James Neathery, and I'm excited to share with you that we've created a new series. This is a topical series where we've taken previously recorded clips, compiled them by topic, idea, and particular concepts within the infinite banking footprint and the financial world broadly. Topics will include loans, loan repayments, paid up additions riders, other riders, dividends, long-term thinking, what could go wrong, what does go wrong within the infinite banking footprint. And I hope you enjoy listening. And it was created for your edification. Thank you.
Speaking of banks and everything, I was working for a small community bank at that time. At that point, I was a business development officer, but before that, I was a commercial loan underwriter. So I learned to underwrite these loans, mortgages, and all that kind of stuff. Then I became a loan officer after that. Then went to Citizens Bank, larger bank, for another 3 years. And basically, my whole idea was I was never going to stay in banking. Banking was not where I wanted to be, but it was a means to an end for me. So I started just basically stocking cash from these fix and flips that I was doing. And then in 2004, it was around, I want to say early or middle November of 2004, when I quit my job there, quit working for the bank and went full time in real estate investing. What I needed to do psychologically, this was just for me, James, I needed to have 18 months worth of bill paying ability in my checking and savings account, right? Knowing that I had 18 months to be able to make more income, future above and beyond before I was willing to go out on my own. So that's once I reached that 18-month goal, I cut loose, went into it, and was doing fix and flips, went through that financial crisis in 2008. And this will lead into the whole infinite banking concept of why it's so important and why it's so powerful too. Because what happened is, during that financial crisis, all the banks froze, all credit lines, they cut everything, home equity line of credits, business line of credits. If you didn't have it fully used, you'd lost it, right? You lost all that ability. But for the people that had these policies, these insurance policies, you're able to tap into them and utilize them when they needed them. So I actually borrowed some money from other investors who I later found out, I didn't know where they had it at the time, later found out they had used it from their life insurance policy. Yes.
No way. Well,
story.
A couple of...
Yes, I did not know that initially, but that's what I found out later. So I started borrowing from them and I didn't really dig into or know anything until I met, I think it was James, in the year 2014 or 2015 at a conference in Dallas, real estate investing conference, we met, we talked. I want to learn a little bit about it because I heard you speak there and you gave me the in-depth. I'm like, all right, I got to do this. This is right up my alley. I got to take advantage of this. So that's kind of what got me started into the journey.
Perfect. Well, look, you know why the banks closed the credit lines, limited the credit lines and called notes and did all that? No way.
No, tell me.
Because they can, and they're not taking the risk of loss. They
don't want a risk, right?
They don't want any risk, and that reminds me too. When you talk about banking, and I didn't know you had a banking background, right? So you went from an underwriter to a loan salesman. Basically,
yes,
no disparagement, but that's what the vice presidents of banks do, right? Lending officers. Then. Yep. I think there's 3 or 4 C's in the banking industry. I can't remember the fourth one, but it's collateral, cash flow, and character. I can't remember what the other C in banking is, right?
I'd be credit.
Oh, yeah, credit. There you go. Yeah, the 4 C's of banking. Oh, that's interesting. And so I didn't know, like I said, I didn't know your banking background.
Yeah.
And then here you are borrowing money because of the third-party lenders are tightening up their strings, yes. And you borrow money from, fellow real estate investors. Well, how and when did you find out where they were storing their capital to lend it to you?
So I think I met him at one of these real estate investment meetings out in suburbs of Philadelphia where I was living at the time, DIG meeting, and it's the biggest group in southeastern Pennsylvania. And I met a few private lenders, and that's when I got my first private lender loan. And that's the first person who told me that they utilized that. They also use their IRA, obviously. Sure. They might even had a self-directed, with a solo 401k type deal too. They use multiple sources that they've used to do that. And that's when I first heard about it. I honestly, though, James, didn't know what it was still at that point, because we're going back into 2009, 10, 11 timeframe before I met you, a few years before I met you there. So that was still a whole new concept with me. I knew all about the IRAs and borrowing against your IRAs and all that. But there's a lot of limitations with the IRAs, a lot of government involvement where, as you explained to me, there's really not the government involvement in these life insurance policies that there are in the IRAs, the 401ks. You don't have those same limitations. You can pull it out for any reason whatsoever where, if I need to borrow from my 401k or my IRA, it's got to be for specific things, such as like whether it's real estate or whether it's health or education. That's pretty much what you're limited to.
And 50 grand or 50% of the value.
50% of the value, which is the big key thing where life insurance is more than that right from jump, after you fund that account and wait a little period of time, at least 30 days or so. So you already got more than that jump right there.
And the loan request at a life insurance company is nothing more than a service form, right? It's a multi-purpose service form. And there's no place on there do they ask you what is the purpose or the intent of use.
Nope.
There's nothing. Here's the loan. This is the amount that I'm asking for, and send it to me. The only thing that they really ask you, and it's a series of, check a boxes. Do you want a check or do you want it directly deposited? I mean,
it's so simple. I literally go online, get the form, make the loan, boom, and within 4 or 5 days, it's in my account. It's really quick and simple and easy.
Yeah. But it's still surprising sometimes how much capital and how rapid the cash value accumulates. Did y'all experience that at all?
Well, when we look at our statements year after year, we're like, whoa. I mean, because like Junior's policy, we haven't taken a loan out on it for several years. And we're like, whoa, it's increased, substantially in 1 year. You can't, and we didn't have to worry about the stock market. We didn't have to worry about is the Dow up or down or whatever. I mean, you don't have to worry about any of that stuff. And to me, that's just, you can control your own money much better. You know what's going on with your money, because at any point I can call your office and say, or look online and see what the value, how much I have available for me to take out a loan. And I don't have to have a bank to approve it. I have to sign a piece of paper, and your team sends it in for me. And then a few days later, I get a check or get it into my checking account, depending on how big it is. I mean,
One of the things that I forgot to mention, or we did whenever, you asked tell us some of the things we did with our policies. Our son, with his, he used it to help him, with his down payment. Some of it, he had some and then used some of ours just to.
A down payment on a home?
On a new home, yes. So, And that's a policy that we converted, if you'll recall, from another company and went with our company, and and then we added capital to it to build them to get their banking system going, and here it is at work.
So, and I'm typically not a proponent of replacing policies, but when it's in your best interest or the client's best interest, so you can't do it quick enough. If it's right, it's right, and if it's wrong, it's wrong. So, and I vaguely remember that. I do remember that. It was a legitimate company. There was nothing wrong with the company.
No. We just wanted to capitalize it, and that's, and we could do it.
Increase the death
benefit
exactly.
Too. And we also, substantially. Right. And they're young, our kids are young, so it was a good time to do it. And
right.
So,
yeah, I remember doing it. And man, when it's right, you can't do it quick enough.
Mm-hmm.
Yeah.
So, and then when y'all make your children's, when you make loans to them or help them with these things, do you require like a loan repayment? And you don't have to share anything you don't want to. I'm just asking though, have y'all set up like family guidelines or family rules? Have y'all had those kinds of conversations?
Well, with our daughter, she's now the owner of her policy. She has, taken the steps to make it her policy.
Okay.
So, and she's got a payment plan going. So she's paying her. She used hers, if you recall, for her student loans, and so she's already.
I love that.
She's already got it set up on a bank draft, and our son is. We're in the process of talking to him about getting his converted to him, so it'll be his policy.
Just change of ownership. So, in those The policies on the children, did we 1035 exchange from the previous company
Yes.
into those?
Yes.
Okay. So really then, and I know I should have a better memory, but I think that y'all started those original policies when they were pretty
babies.
young.
Yeah, they were babies. They were
Okay.
babies. And it was just a minimal amount.
It's like a $15,000 policy.
Yeah, it wasn't very big.
So they were originally started for the benefit of your children anyway. And so years later, we just increased that value or the benefit by the 1035 exchange, structuring them where they can have more and more and more. And now you're in the process of giving them, transferring wealth from one generation to the next. Now, not that it's a bad thing to have to, meet with attorneys and things, but did we have to do a lot of work to get that done? Did we have to meet with anybody?
No, it was
that done.
papers. It was paper signatures. I think the hardest part was getting a hold of the other company to get the right paperwork, if I remember right. But it was just paperwork.
Their policy was you had to meet with the agent personally.
Oh yeah, I remember they were draconian. It's like I remember that as some companies.
So anyway,
your agent had to sign off like he had to approve it. And I won't go down that road, but he probably disparaged the new company and and my character. But once that was done, though, what I was whenever you're transferring ownership from yourselves to your children, we didn't have to do a lot of.
No.
It was a piece of paper.
Yeah. And then the loans, I was talking to a client the other day, and he said, James, the requesting a loan online is so easy. I accidentally requested a loan, and I didn't reverse it, and I got a check. So can I just send the check back? And I'm like, wow, that's pretty easy. And my point is this: it's relatively easy to get a loan.
It is. Yep.
But it just ties right in with what you said. It's our money, so.
To make a purchase, I don't care what it is, you've got to have capital. Well, that's so elementary, we jump over that. Okay, well, if you don't have your own capital, then you're beholden to the third-party lender, and you've got to jump through their hoops to have access to their capital, right? Because they're gatekeepers. So I don't walk people through. I say this often. I'm like, look, for you to make a cash purchase, you have to have saved up cash, right? Or suddenly come into a bunch of cash. All right. Yes. And most of us don't suddenly come into a bunch of cash. So we have to save up cash to make a cash purchase. And then we have to save up cash again to make a cash purchase. And so if we play a word game and just change the name of the cash flows for a minute, and I know words have power, absolutely. So if I'm saving money to make a cash purchase, can I take that cash flow and make it a premium and pay a premium? And then I'm going to accumulate cash.
Yes.
And then instead of withdrawing the cash from a savings account to make a purchase, can I just collateralize the cash value and now create a loan repayment?
Yes.
I mean, that's very simple, right? It's very easy to say that. And so it's hard sometimes to wrap our mind around how simple it is because we got to get past these words like life insurance.
Right.
We got to get past these words, commissions, insurance agents. And but anyway, so you heard something along those lines resonated with you talking about purchasings.
Yep. And that really resonated with me. And I started thinking, wait a minute. Can't you, I kind of mentioned this earlier when I was yakking. Okay, you can actually pick out items that are ordinary expenses to you. It's not an investment. It doesn't necessarily, that. But you can get 6 months worth of what you pay for your cell phone. You get 6 months worth of what you pay for your cable, right? Because we got to have awesome stuff now. Before it was just like some basic package. Now we got to have everything.
Parkinson's law right there, right? A luxury once enjoyed becomes a necessity.
Yeah. I'm still finding crap on there now. And my son says, yeah, that's always been there. You didn't know that was there? Well, no. And he makes fun of me and never goes away. But, he's right. Okay. All right. So you pay your cable and you pay 6 months worth of your car insurance, and you're laughably tiny amounts for stuff that your house used to be thousands. Now it's, is just the car insurance and a little bit of renter's insurance, right? So stuff like that. We got full coverage on both cars. We're looking at like 250-ish, and then cable-wise, we're looking at 150-ish. Well, that's 400.
Yeah.
Wait a minute, about 100 a month, all right, for cell phone, 500 a month. You take out a loan for 6 times 5, $3,000, all right? You prepay all those items, all right? And then for the 6 months when you don't have that payment to make, you make a payment in the amount of $500 back to your policy. Most people would just go, well, what does that do? Well, each time you make a payment on that policy loan, you're recovering your daily expenses. At the end of 6 months, you got the money back.
Do you do that? Yeah. Do you do that with your policies?
Okay. And now we're looking at the idea, all right? Well, dang. We could put 6 months worth of our rent in a custodial account, and then for the next 6 months pay a payment back to the policy, right? You're recovering your rent.
Does your does your landlord, would they give you a discount if you paid annually?
That would be nice. But no, we're in a really nice place. So if there's a potential discount for something, you go ahead and pay it in full. Like, for instance, I had a couple of odd bills here and there for medical, a couple of specialists. And my wife, her instinct is always to say, hey, if I pay the whole thing, can I get less or pay less? It's like her instinct. And she does that every time and will always ask that question, before bills are paid. So she kind of like having your backup there.
I'm the same way. I like to Gentile them down. You know what I mean? I'm not a Gentile. I'm a Hebrew, but I like to Hebrew them down if I can. I don't want to be cheap, but I don't want to. I want to get value.
Yeah, but cheap is not always the best. Sometimes the best is the overall when you're thinking about the value of what you're getting.
Sure.
And if you get to recover huge chunks of your living expense, and you can keep your easy position as a armed security guard at a bakery, that's the best.
Now, here was another light bulb for me. Speaking to that point, they created a system where all roads to access to capital lead back to them.
And they're toll takers. How convenient.
Isn't it? We create a system where first you need access to capital, but if you need it, guess where you got to go? You got to go through me. So I'm like, wow. So that hence going back to the 401ks.
Yeah, they want to. I feel like if you go get a loan, a conventional loan in today's conventional construct, I feel like, I should roll up my sleeve and show them the number they've tattooed on me with the credit score. You know what I'm saying?
Listen, you're talking to a hurricane Katrina survivor, right? So we went through Hurricane Katrina. Obviously, our whole financial situation got topsy-turvy.
Sure.
10 years later, we're trying to recoup and recover. We want a loan. We got to fill out the loan package. Do you know I had to write a paragraph explaining, saying I went through the worst storm in America. I'm a good boy now. Please, we made it. It was the most degrading. But this is what I had to do if I wanted to get a home for me and my family. So I'm like, to your point, I'm like, oh my, this is crazy. This is crazy.
And how much of that do you want? How much of that do you want? We can only take so much, and I think I found in my experience, 15 years I've been practicing this concept. I met Nelson about 15 years ago, 15. And after being in the life insurance business 14 years and moderately successful at least, right? I mean, maybe not the first guy in line, but I mean, I was paying attention. I was not walking around brain dead. I'm paying attention, trying to do better, like everybody else. Okay. In what I've experienced, most of the time, and Nelson always said this is more caught than taught, but whenever an individual has had some less than pleasant dealings with the bankers, i.e. the third-party lenders, this idea resonates a little bit quicker.
Yeah.
So I'm just saying there is a solution.
Right.
There is a solution.
So the idea of having access to capital where you don't have to beg and borrow is literally your money, and that alone is just the whole thought process of being able to finance your own reality and build a personal economy. Just that idea in and of itself.
Let's talk about liberating.
Man.
Did you ever get that liberating feeling from an IRA or a 401k? I'm just asking.
No, I'm putting all my money in there. I'm taking all the risk. I can't access it. If I do, you're going to penalize me. When I do access it, it's grown, and you're going to take the money that I've took all the risks off of, and you're going to take a portion of that and give me what? Nah, I don't like that program.
No.
I don't like that program.
Talking about the infinite banking system, and I looked at different outlets of social media. So it wasn't just YouTube, it wasn't just Facebook. There was some Instagram and even articles. So I just Googled and read lots of articles, and it just seemed like, hey, this seems really great. It kind of makes sense. It doesn't fully make sense, but yet I'm going to try it.
All right. Because you're a risk taker.
That's right.
Right. And so 8 years in real estate, and you mentioned flipping and renting. So is that what you do currently? I mean, you
That's right.
A real estate investor?
I'm a real estate investor, and that's really how I've used my life insurance policy, is just to that cash value I use to flip, I use to make the down payments, and then it's just a rinse and repeat. I really use it like a line of credit, and it's really nice because it's so flexible. And I can honestly say it has been a saving grace for about 2 properties, because if it wasn't for the policy, I probably wouldn't have gotten those properties.
Well, can you expand on that, on those 2 deals?
So pretty much, even with hard money, there's a lot of lenders that can close fairly quickly, to be honest.
Sure.
However, there's still some type of documentation that's needed from the lender. There's still conversations to be had. And in real estate investing, sometimes you need to know within hours if you can put an offer in. And so I think that's where it really played a role in knowing that I have that cash available to me and I can just pull it out quickly. And so I think that's just that flexibility, timing. That's right.
On both of them, timing?
Yep, that's right.
The office building that we're sitting in, and I've talked around her a little bit here and there, but we were next door. This, was empty for a minute, and the bottom line, we're sitting in here because of the access to capital that I had. And there was an offer, I made an offer. They made a counter offer. And then my counter to their counter offer was, yes, if you can close within 10 days, calendar days, not business days. So the first one to the deal with cash wins. I don't care how bad everybody, cash is trash or whatever you want to say. Cash is king.
That's right.
My opinion. Okay. So you're still active in real estate.
I am.
And so you flip, and do you buy and hold too?
So right now, just because of the market, I've just kind of transitioned. Me personally, I've made the decision to transition out of flipping and specifically just staying within the buy and hold.
Mm-hmm. Is that because of the cost of capital and just the market as far as prices of properties? And I got to say, me personally, I'm not, it's like the amount of people that are, flipping and, do all kinds of things, short term, just turn the cash, turn. There's a lot of them. And I don't necessarily want to use the word competitive, but it's competitive, and you've got, so when did you transition out of flipping?
So I think, we're in 2024. So about a year and a half ago is really when I made that hard transition. I did a couple of flips last year, but not to the extent that I had before. And then this year, there's no flipping.
Not even interested, huh?
No, not at all.
Is this your, local market, or do you buy all over the country or the state, or?
No, so typically all my rentals and flips have been in the Texas Panhandle.
Oh, okay.
Yeah.
There's a lot of little towns up there.
Absolutely.
So Lubbock, Amarillo.
So really Plainview, Tulia, Amarillo. And so funny, I would have investors saying like, why are you investing in these small towns, the appreciation? And I'm like, I have no competition in these small towns. Like no one's buying in here. Right. And so it's just been my area that I focus on.
Your little sweet spot right
that's
there.
Right.
Is that where you're from, out that way?
Originally, that's where I'm from.
So you're comfortable with the market and
Yep. And also just even knowing the communities that you're investing in, that makes a big difference, I will say.
Yep, I agree. Okay, so you've used the infinite banking concept, in your real estate. You use it kind of like a line of credit, just the access to capital. So if you, like on a fix and flip, there's of course, a purchase price, and then there's all of the cost to getting it ready to flip. And when you did deals like that, how did you address your loan repayments? You paid premium to create the cash value that you can leverage, collateralize to go buy the property. Did you have a system, or have you developed a system where? And so my question is maybe more narrow. Whenever you did a fix and flip, did you set payments up, loan repayments between the purchase, the repairs, and then flipping it, or did you just do lump sum?
Lump sums. So I would pull the cash out, and then once the house was sold, like flipped, sold, then I'd pay it all back in one lump sum. And I was very intentional about making sure I always paid it back.
Yeah.
And rinse and repeat.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.